What's up, everybody? This is Sungko, the Korean bro. Today is 2023, February 13, right? Hmm. Let's look at stock articles, okay? Hmm. Hmm. What articles we have tonight? This dividend stock is gaining momentum. Is it too late to buy? Disney is open to selling Hulu. What investors should watch? These two cloud stocks could be headed into the stratosphere. After great performance, this will be region's financial next challenge. To highlight, President Biden just doubled down Social Security and Medicare. Had $1,000 to all other different stocks to buy and hold forever. The unstoppable growth stocks to buy for 2023 and beyond. One stock I own and will buy for more of a no matter what happens with the stock market. Hmm. The best stocks to invest for $5,000 right now. Hmm. Three recession indicators haven't been wrong for at least 50 series, and they all agree what happens next. Two changes Ford could make to potentially save billions of dollars. Okay. First things first. This dividend stock is gaining momentum. Is it too late to buy? What is it? CSX, one of America's biggest railroads. CSX. Okay, skip. Disney is open to selling Hulu. What investors should watch? CEO Bob Iger left the door open to selling Disney's stake in Hulu. That's a stark reversal from the company's very public position over the past several years. Iger's a shrewd negotiator, so his comments could be the first volley in a year-long game of chess. I've always assumed that Disney would eventually own Hulu outright, but that may not be the case. Hmm. A stunning reversal. Two cloud stocks could be headed into a stratosphere. The Nasdaq moved higher early Monday after a tough week. Monday.com reported strong fourth quarter financial results. Fastly got a big upgrade from stock analysts. Happy Monday.com, Fastly. Stratosphere. After the worst week of 2023 on Wall Street, investors are in the mood to claw back some of their recent losses. Stock index futures were mixed early Monday morning, but the Nasdaq Composite looked as though it might put in the best performance. Nasdaq futures were up almost 0.5% as of 8 a.m. ET. Cloud computing has been a high growth area for several years, but shareholders have had to come to grips with the possibility of slowing expansion as economists worry about the possible recession. Nevertheless, for Monday.com and Fastly, the mood among investors was optimistic after both tech companies enjoyed good news. As a result, both cloud stocks moved sharply higher, and many are hopeful that the gains will be just the beginning of a longer term trend. Hmm. Fastly, let's get back its momentum. Fastly. It's the first time to hear the name Fastly. Let's see. Fastly. Fastly, okay. Hmm. Fastly. What is this company? Operate an edge cloud platform for processing, serving, and securing its customer application in the United States, Asia Pacific, Europe, and internationally. The edge cloud is a category of infrastructure as service. It enables developers to build, secure, and deliver digital experience at the edge of the internet. It is a programmable platform designed for web and application delivery. The company offers computer and edge. Okay. After great performance, this will be Regions' financial next challenge. Regions just had an excellent fourth quarter, but the bank is currently very reliant on revenue from the loans and bonds. The bank's next move will likely be to build out a better fee income franchise. The large Southeastern Bank Regions Financial, okay, it's a bank company. Skip. Hmm. While continue buying shares of this magnificent dividend stock hand over fist. Realty Income has a long history of growing its dividend that has enabled the REIT to produce a strong total returns. With more dividend growth likely, it's a safe bet to continue producing attractive returns. Down around 15% over the last year, these two dividend growers have slightly underperformed the market. Domino's Pizza, Sherwin Williams. Domino Pizza. Let's look at Domino Pizza for fun, okay? In much the same way Sherwin Williams thrived amid the lockdown, Domino's Pizza would also be considered a pandemic darling of sorts, okay? While not thriving to the same extent as Zoom, for example, Domino's reported double-digit sales growth for 5 straight quarters at the end of 2020 and into 2021. Thanks to its robust carry-out operations and ability to implement a contact fee pickup option during the pandemic, Domino's succeeded despite the challenging environment. The success sent its stock skyward, only to tumble over 36% since its all-time highs. Hmm, okay. Three unstoppable growth stashed by for 2023 and beyond. Disney, Marco Delibre, Fortex Pharmaceuticals. Oh my god, pharmaceuticals. I don't know about that. Let's look at Marco Delibre. When I think of unstoppable trends, both e-commerce and fintech make the list. Marco Delibre hmm, is a leader in both arenas. Okay. Some call Mercado Libre the Amazon of Latin America. That's not a bad description. The company's e-commerce platform is especially widely used in Argentina, Brazil, and Mexico, um, three of the most important markets in Latin America. Hmm. Wait, let's see. Argentina, Brazil, and Mexico, three of the most important markets in Latin America. In the third quarter of 2022, its online marketplace reached a record of nearly 43 million buyers. Fintech, though, potentially presents an even more lucrative growth opportunity for Mercado Libre. Hmm. Many people in the areas where the company operates don't have traditional banking service. Many people in the areas where the company operates don't have traditional banking service. Okay, no traditional banking service. Its Marketo Pago digital payments platform offers an attractive solution. Okay, so uh, hmm, digital payments is a really attractive solution. Probably the greatest knock against Marketo Libre's evaluation, its shares trade at nearly 85 times expected earnings. However, it's important to keep the company's tremendous growth prospects in mind. I think that 5 years from now, Market Libre's current market cap of around $60 billion will look like a bargain in retrospect. Hmm. Its growth is expected to come in the future because they're so huge and their impact is magnificent. So we've skipped some articles because those were the articles that I'm not really interested in, like the companies listed in the article are the ones that I'm not really related to because they're like like Disney and some companies that are not really that has nothing to do with like software or any kind of thing. Software is my area, but like those like REITs or pharmaceutical and that kind of stuff is not really my thing. So One stock I own and will buy more of no matter what happens with the stock markets. Alphabet has been dealing with a slowdown in its business. The company thrives in the various industries in which it operates. Mm-mm. Alphabet stock traded a P/E ratio of under 22, making it a non-brainer investment right now. Despite recent challenges, this is still easily one of the best businesses on the planet. Okay. Last year was a hard one for investors. The S&P 500 and tech-heavy Nasdaq Composite Index lost 19%, 33% respectively in 2022, making their worst annual performances since 2008 when the global economy was being ravaged by the Great Recession. This year is off to a better start. Both indexes were up nicely in January. However, stock markets are volatile, and regardless of what happens in the near future, I wouldn't hesitate to load up even more on Alphabet shares in particular. Alphabet. Here's why I like the business so much. Look past your recent numbers. Okay, recent numbers. What do they say? Hmm. After posting stellar annual revenue, after posting annual revenue gain of 41% in 2021, Alphabet hit the brakes in 2022, increasing overall sales by only 9.8% for a year. Difficult comparisons deserve some of the blame, as it was going to be extremely difficult to post strong growth on top of 2021's impressive figure. Investors are all too familiar with the other cause. Softening macroeconomic environment, higher interest rates, elevated inflation, and recession on the horizon have all seriously hurt the advertising market. Hmm. Advertising market, right? A sizable chunk of Alphabet's total revenue, 78% in 2022, comes from advertising. So it's not surprising that this company would be adversely affected as businesses trimmed their ad and marketing spending. Hmm. In the fourth quarter, Alphabet was only able to increase revenue by 1% on a year-over-year basis, continuing a trend of decelerating sales growth throughout 2022. Perhaps even more alarming, the operating margin went from a 29% in quarter fourth 2021 to 24% in the latest 3-month period. What's more, YouTube and ad revenue declined 8%. These unfavorable developments help explain why Alphabet stock ended 2022 down 39% for the year. Mm. As investors focus on the short term, apparently soared on the business. Okay. But there were some bright spots. The Google Cloud Platform not only posted revenue of Google Cloud Platform posted a revenue of $7.3 billion in the quarter, up 33% year over year, but its operating loss shrank from $699 million in quarter three 2022 to $480 million in quarter fourth. And management is fully focused on right-sizing the cost structure, right-sizing the cost structure, co-structure. This year across the entire business, something shareholders should cheer for. We have significant work underway to improve all aspects of our co-structure in support of our investments in our highest growth priorities to deliver long-term profitable growth. CFO Ruth Perez said in the earnings press release, a recent announcement to lay off 12,000 employees aligns with these mm, comments. Mm. Okay. Better days ahead. A single difficult year is hardly enough of a reason to abandon a long-term investing thesis that remains strong. A strong difficult year is hardly enough of a reason to abandon long-term investing thesis that remains strong. In fact, investors would be wise to consider buying more of the Alphabet on the weaknesses seen over the past year. As of this writing, shares are trading at the price earnings ratio of less than 22, which is cheaper than its 3, 5, and 10-year historical valuation multiples. This means that now might be one of the best times to buy the stock. Shares are trading at a price earnings ratio of less than 22. Less than 22. Two, which is cheaper than its 3, 5, and 10-year historical valuation multiples. This means that now might be one of the best times to buy the stock. Investors' concerns will be warranted, but taking a step back and focusing on the bigger picture makes it clear that Alphabet's prospects are so incredibly strong. For starters, with ad revenue of $225 billion in 2022, the business commands a 29% share of the worldwide digital advertising market. And while rivals with lesser share, like Amazon and TikTok, are definitely making rapid gains, uh, the global digital ad market is projected to eclipse $1 trillion in 2027. Okay, leaving plenty of opportunity for all parties to increase revenue over time. $1 trillion. And the amount of data in the world doubling every 2 years, coupled with the fact that there are also roughly 3 billion people globally who have not yet used the internet. Wow, dang, 3 billion people. Wow, not use the internet. Okay. It's obvious that Alphabet's position as a gateway to the internet is a powerful and lucrative one to be in. Amount of data in the world doubling every 2 years, coupled with the fact that there are still roughly 3 billion people globally who have not yet used the internet. The company will likely continue to be a critical service provider to individuals, corporations, governments in the years ahead. Alphabet's the latest challenges aren't necessarily specific to its business, and they should prove to be temporary. Alphabet's latest challenges aren't necessarily specific to its business, and they should prove to be temporary. Which should ease investor worries. I still believe that this is one of the best companies on the planet, easily making it a no-brainer stock that investors could buy without hesitation, no matter what the broader stock market does. Hmm. Okay, let's summarize a bit. I just read a few articles, and like there's still a few articles left. But then at this point, let's get to some of the content that I just read. Okay. First, I read the article about Marco De Libre. Marco De Libre is specialized in e-commerce and fintech, and it's one of the biggest. Uh, it's one of the biggest company. I mean, like in terms of e-commerce and fintech, of course, in Latin America, it's like Amazon of Latin America, and it this its growth is expected to come in the years ahead because uh, number one, it's like the service most used by people living in Latin America, and second, there are still people, there are still areas where even traditional banking doesn't exist in the area where this service is not provided. So, like, I mean, by using the application made by Mercury Libre, they can, people living in this area can use their digital service. They don't have to use like a traditional banking system, but like once they have like phone or some kind of a digital device, they can use application or service or whatever that is. They can use it. They can use the service provided by Mercado Libre, right? So their long term long term future is expected, right? And the one that I read next was Alphabet, and like mm, the point was that uh we've been having a hard time, right? Recession. We've had like high inflation and high interest rate, and like supply issue, and like the war between Ukraine and Russia, and like things piled up, and like uh due to some kind of factors, we've been having some recession, and because of that, advertising industry impacted has been affected a lot, and like mm, and as you might have seen from the articles, a lot of tech companies are laying off uh, people, and Alphabet also uh, laid off 12,000 workers, and like uh, they also are having a hard time. But then recent recession uh, doesn't really demonstrate the fact that the future of this company is no good. You know, future of this company is still good, but then its recession is a temporary thing. So what we have to focus on is that it's got a lot of potential as it works as a Google Cloud platform, and like still considering their price to earnings ratio, it is 22, which is comparatively less than the average of 3 and 5 and 10 years. Um, uh, well, POE, a price to earnings ratio of the average price to earnings ratio of 3 or 5 or 10 years before. So now is like the perfect time for you to buy. Mm. And like still they're like they have a 29% share in ad market. Of course, they got a lot of competitors like Amazon and like some other big tech companies. But then um, ad market is going to grow big, and it's expected to get really large. It's expected to worth like a few $1 trillion in the year 2027. So and like still there are still people who has never used the internet, and like there are still, according to article, it said like 3 billion people have not still used the internet, so we still have more room to grow. Oh, it's like the summary of what I read. Hmm. Anyway, it was the Alphabet story. Let's go to the next one, okay? The best stocks to invest $5,000 right now. Let's look at the price of Alphabet first. Hmm. Okay, let's look at price of Amazon. Okay. Amazon's outlook is improving. But its valuation doesn't reflect improvement yet. Mm. Alphabet's next AI moves could accelerate the company's growth. Alphabet's AI move. Vertex Pharmaceutical has a resilient business model, clear near-term catalyst, and more multi-billion-dollar opportunity than what Amazon. Let's read Amazon, okay? First. And when Bill Mayer says the stock is great pay, it pays to listen. And that's exactly what the former famous investor said about Amazon in January. Specifically, Miller called Amazon one of the easiest names in the market right now. I agree. The optimism about Amazon isn't just because the stock remains more than 40% below its previous high. More than 40% below its previous high. The main reason to invest in Amazon are that the company's outlook is improving. Outlook, we say outlook, okay? Outlook is improving, and like its valuation is reflect this improvement. Its valuation, yep, valuation does reflect this improvement, okay? As Exhibit A look at inflation, the Federal Reserve Chairman Jerome Powell, his valuation doesn't really reflect this improvement. Valuation doesn't really. At Exhibit A, look at inflation. Federal Reserve Chairman Jerome Powell said this week that this inflationary process of getting inflation down, has begun. That's great news for Amazon, which has blamed slowing growth in large part on sky high inflation. Also, Amazon has cut costs. These moves should lead to increased profitability and stronger free cash flow. Amazon has cut costs. Has cut costs. Okay. Should lead to increased profitability and stronger free cash flow. If new bull market begins, Amazon should be among the big winners, and investors gain a newfound appreciation for this beaten down e-commerce and cloud hosting giant. Cloud hosting giant. Amazon is known for a cloud hosting giant and like e-commerce. Okay. And next one is Alphabet. Okay. Never underestimate Alphabet though. Okay. I think some investors have ignored that advice lately. They went along with spiel that OpenAI ChatGPT presented some close to an existential threat to Google. I suspect they will soon see otherwise. Alphabet is launching its rival to ChatGPT, Google Bard. Okay. Uh, though I think have some investors have ignored the advice lately. Alphabet is launching its rival to ChatGPT, Google Bard. To be sure, the initial release will be based on what the company calls its lightweight version of its large language model Lambda. Okay. The initial release will be based on what the company calls a lightweight version of its large language model Lambda. It could mean users will see more inaccuracies than they prefer. Users will see more inaccuracies than they prefer. Okay, let's repeat it one more time. Okay, the initial release will be based on what the company calls its lightweight version of its large scale model Lambda. However, it's only a matter of time before the full blown version will be available. Okay, so their Alphabet, they have thing um that's about to um that's about to go out, mm, that's about to be available. But don't invest $5,000 in Alphabet just because you might have a next shiny new toy that generates a lot of buzz. Incorporate Lambda into Google Search Cloud and ultimately boost their revenue rather than cause decline. As some anticipate, Alphabet's integration of tools and application program interfaces for AI technology into its Google Cloud services could also attract more customers to its fast-growing cloud hosting business. Alphabet's integration of tools and application program interfaces for AI technology into its Google Cloud services could also attract more customers to its fast growing cloud hosting business. Like Amazon, Alphabet should benefit if the macroeconomic picture improves. When that happens, macroeconomic picture improves. When that happens, the stock will almost certainly soar as advertising revenue again picks up steam. Okay, let's sum up what I just read. So, Uh, Amazon is a cloud hosting giant, and they are e-commerce giant. Um, their outlook is great, and its valuation is uh, of course, its value is incomparable. Its value is great, and they recently cut costs, which means they can have more free cash flow. And for the Alphabet, they will come up with new toy, whose name is Google Bot, and Google Bot will compete against the service, which is already out in the world. Its name is ChatGPT, and but then once it's working well, once Google Bot is working well, it's gonna get buzz. Hmm. It's gonna generate a lot of buzz for real. So um, if the macroeconomic picture improves, its Alphabet would definitely benefit. You know? Okay, let's look at the next one. What do we have? Hmm. Hmm. Let's read the stocks that Warren Buffett picked. Okay. Hmm. The secret portfolio is putting some of its money to work in a really big name artificial intelligence stocks. Thanks to an acquisition 25 years, Buffett's company owns a specialty investment firm with $5.9 billion in assets under management. Number one is Microsoft and IBM and Nvidia. Let's start reading about Nvidia first, okay? Nvidia, the third artificial intelligence stock held in Warren Buffett's secret portfolio, is semiconductor specialist Nvidia. Okay. Nvidia is best known for its role as a graphics processing unit giant. Yes, that's right, GPU giant. The company GPUs are used by gaming enthusiasts. Mm, business operating large data centers, mm, even cryptocurrency miners. Nvidia accounts for nearly a fifth of global GPU sales. Accounts for nearly a fifth of GPU, a fifth of global GPU sales, and holds lion's share of the discrete graphics card market. The most direct impact NVIDIA is having with an AI has to do with its GPUs. Hmm. Since AI is rely on high power computing, the company's GPUs are necessary tool that facilitates machine learning and split second decision making. But NVIDIA's AI opportunity involves more than just taking advantage of businesses. NVIDIA's AI opportunity hmm, involves more than just keep taking advantage of businesses' needs for high power GPUs. Last year, the company introduced a number of AI platform initiatives. AI initiatives, okay, including its conversational AI platform and AI enterprise platform. The solution provides tools to the business to deploy virtual agents or chatbots, virtual agents or chatbots, as well as overseas development and deployment of AI innovations. While AI is unlikely to be a significant revenue driver for NVIDIA anytime soon, the company's action makes clear that AI is a big part of its future. Okay. Okay. I just read the article about NVIDIA and like They are their main product is a GPU, graphic processing unit, and it's mostly used in gaming industry. And a lot of game users, uh, a lot of gamers use great GPU, right? And like it's used in large data center and Nvidia product. It's like fifth of uh, global processing unit. And since uh, GPU is like a necessary tool for using AI, because has AI needs uh, high technology, or you know um, really 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 sophisticated device or something. Otherwise, AI wasn't working well, right? It's kind of obvious, right? So, mm. But like Nvidia, not only that, not only GPU is a necessary tool for AI, so the future of Nvidia is bright. But then Nvidia also has come up with a AI platform, uh, AI whatever. What was it? AI. What was it? AI enterprise platform? AI platform. So so what we can notice is that AI is like on future of technology. That's what we can notice, right? Right. IBM, Microsoft. Hmm. A bull market is coming. 5 killer growth stock just bought. Many high growth stocks were taken down by economic uncertainty. Some continue to operate from a position of strength, suggesting a rebound is inevitable. In some cases, it's already begun. I put my money where my mouth is, buying each of these stocks last week. Let's see, Nvidia. We got Nvidia, Snowflake, the Trade Desk, MongoDB, Tesla. Mm, okay, we don't have that much time. I'm just going to read this one for last, and then I'm done tonight. Okay. Okay. First things first. Nvidia. Okay. There's no denying Nvidia's growth stock bona fides. Over the past 10 years, the stock has soared more than 7,200%, driven by revenue. That surged more than 500%. The company is the undisputed leader in the discrete desktop graphic processing unit market. Desktop graphics processing unit market. Furthermore, its data center and cloud computing customer. They even have computing customer. Okay, cloud computing customer. Uh, is a list is a veritable who's who of tech glitterati, and its credentials didn't stop Nvidia stock from plummeting as much as 66% off its peak reached in late 2021, but the evidence suggests a robust rebound is in the cards. Hmm. As recently as its fiscal 2023 first quarter, Nvidia was posting a record quarterly revenue that grew 46% to $8.29 billion, while its adjusted earnings per share of $1.36 grew 49%. The 2 quarters since, and in the face of rising economic uncertainty, customer and business alike rallied rain expanding. Yeah, experienced investors know that this too shall pass. Recent recession, right? When the bull market starts to run, and it will so too will Nvidia. In fact, that may have already begun. Nvidia stock price has doubled since October. Mm, we got more articles, but this is it for today, and I'll come back tomorrow. Okay. See you and have a great night. Okay. Bye bye.